Donald Trump är alltså USAs nya president. Aktiemarknaden har ju såklart påverkats av detta. Nu sitter jag här med Kase Capitals grundare Whitney Tilson, som också är en värdeinvesterare som har skrivit många böcker. Whitney Tilson, how has the dynamics of the stock market changed with Donald Trump as the new president? And what will happen closest here?
Yeah, well, I don't know for sure, but I would say I'm very, very concerned. Donald Trump was elected because he promised change, not moderate change, radical change. Investors generally, when they're making long-term investment decisions, like stability, like predictability. And so Donald Trump introduces enormous uncertainty into the markets, into the economy, and into certainly the U.S. economy. But in particular, one of the key pillars of his campaign and his appeal is to tear up the trade agreements that have really been the fabric that have united the developed world since World War II, really. And so the prospect of a trade war, for example, is today much higher than it was before President Trump was elected. President-elect Trump, I should say. He hasn't yet taken office. But so as an investor, I am very cautious right now, very concerned.
But you don't really see that in the stock market right now.
Yeah, I must say, the immediate reaction to the prospect of Trump winning the election was the futures were down something like 5%. And then when the market opened, the market is up. And I can't explain that. My view is that the rational reaction would be a severe market sell-off. So I'm scratching my head. My view is clearly contrary to the consensus view out there, at least in the immediate aftermath of his election. I tend to think, though, that there is going to be, that this is maybe a very short-term phenomenon, that as investors realize the consequences of a very, I believe, unstable person, an unpredictable person. Forget his economic policies. Just as a human being, he is uncontrolled, uncontrollable, unstable. I don't think investors are going to react very favorably to that.
But if you look at what he said that he will do, he will cut taxes, get rid of Dodd-Frank, do a lot of investments in infrastructure, for example. Won't that be good for the companies?
Well, we'll see. The problem is his policy ideas seem to change day to day. So it's not really clear what he's going to do. Clearly, there will be less regulation of businesses of all sorts. Clearly, taxes on businesses and wealthy individuals, anyway, are more likely to go down, not up. So that would be the bull argument. The bear case, though, is because he's very unpredictable. If I were the CEO of a large global company, I would be very concerned about investing hundreds of millions or billions of dollars in a new factory anywhere in the world, outside the United States for sure, because the fundamental system of global trade that has created so much wealth and prosperity in at least the developed world and much of the developing world is, I think, now uncertain what that's going to look like over the next 4 years.
What is the role the president play in the stock market normally?
Well, I mean, the president in the United States is not a monarch. We have checks and balances, and I think those checks and balances are going to be sorely and severely tested over the next 4 years. But the president has enormous power, particularly when it comes to trade agreements, certainly anything relating to foreign policy, that kind of thing, executive orders, etc. So I think any action on climate change, you can forget about that for the next 4 years. Any kind of new trade agreements, any possibility that the Trans-Pacific Partnership might have been passed is now gone. I think the best we can hope for is that President Trump doesn't tear up existing agreements and launch new trade wars against Mexico or China, for example.
What do you think this will have? What effect will this have on Europe, for example?
Yeah. Well, I think Europe and the United States are each almost a quarter of the world GDP. So combined, that's half of the world's GDP. I think Europe is already struggling with many of the issues that we're now going to start struggling with. I think we have had our own Brexit moment here in the United States, very similar dynamics of primarily economic insecurity, but also xenophobia are at work. And if you look at what tipped the election to President Trump, it's the same things that tipped Brexit. And so I think the whole global economic order that of the past, post-World War II order is now as much under threat here in the United States as it is in Europe. And I can appreciate the average voter out in the Midwest, or maybe a lot of voters in the UK, for example, feeling like that world order hasn't served me very well. All I've seen is job losses and foreigners taking my jobs or just jobs moving overseas. So I understand that economic insecurity. But in the case of the UK, I don't think Brexit addresses or alleviates that problem. And in the same way, I don't think electing a guy like Donald Trump to be president of the United States is going to do anything to bring those coal mining jobs back to West Virginia or the manufacturing jobs back to Youngstown, Ohio.
Did you do any hedging ahead of the election? How did you prepare for this?
I am very happy that not really predicting a Trump election, but I saw the possibility of it, and I saw the potential for post-election turmoil. I took my portfolio to 60% cash. And in the immediate aftermath of the election, I view the stock market bouncing into positive territory as an absolute gift to sell a little bit more of my portfolio. And now I'm at about 2/3 cash. So normally I don't make market calls. I'm a bottoms-up stock picker. I view Warren Buffett and Charlie Munger as my investment heroes, and most of the time I follow their admonition to tune out the macro stuff. And I'm sure if you were interviewing Warren Buffett this very instant, and he was very strongly against Trump in favor of Hillary, he would tell you that even as disappointed as he is in the outcome of the election, if a good company were available or a good stock were available for him to invest tens of billions of dollars, he would make that investment in a heartbeat, even with his grave concerns about Donald Trump. And I tend to feel similarly, but keep in mind, this is not late 2008, early 2009, where you are being compensated for the risk you were taking in an uncertain world. You are being compensated by cheap prices. You could buy stocks and companies at very depressed valuations. Today, the stock market is within a few percentage points in the United States of its all-time high. Stocks in general are not cheap. So that's the difference between then and now. Clearly, we're not nearly in the same kind of economic crisis that we were back then. But I would argue we are now in a period of not just for a month or two or for a year, but as long as Donald Trump is president of the United States, there is a degree of uncertainty that he represents that is permanent. It's inherent in the man. And that means that I think the way I'm going to play it as an investor is not to sell everything and go to 100% cash or just short stocks and be permanently negative or bearish, but it does mean I'm going to take smaller bets. I'm going to sit on more cash, and instead of buying a 7% position of a stock, I might make it only a 4% position in my fund. Just take smaller bets and play more defense rather than play offense.
So you would say that Donald Trump as a president, is that the main difficulty for the market right now?
Well, in the United States, the U.S. economy has actually been doing okay. Like Europe has real issues and is in a much more difficult economic situation. Its banking system has not been cleaned up and recapitalized in the way that we have done so in the United States, particularly in many of the southern countries of Europe. The fact that it's not a united country in the same way the 50 United States are united. So Europe already had big issues. I think the United States, in my view, needlessly, unnecessarily introducing a high degree of uncertainty and instability when we were actually starting to pick up, wage growth, unemployment, et cetera. The U.S. economy had recently become one of the best performing major economies of the world. And now I think I have a lot less confidence that that's going to continue.
So you say you sit with a lot of cash now. What will you buy? Do you have any theme you can share?
Yeah. I have not bought a new stock in 6 months, maybe a year. It's been a while. Generally speaking, as a value investor, I like buying the proverbial 50-cent dollars. I like buying stocks that are trading at half of what I think they're really worth. And that's just been hard in a complacent environment where the stock market is at or near all-time highs. I found a bunch of stocks to buy back in January and February when there was some turmoil in the U.S. stock market in the first 6 weeks of the year. But really since then I haven't bought anything. So I can't tell you I'm pounding the table, buying anything new recently. I continue to hold, and I've held for more than 20 years, the shares of Berkshire Hathaway. That's a great stock to own in turbulent times, because if there is turmoil, Warren Buffett has a lot of money that he can put to work. And I think the stock is probably 15, maybe 20% undervalued. So it's not screaming cheap. It's not a 50-cent dollar, but it's a good foundation for a conservative portfolio in potentially a turbulent time.
That's a quite expensive stock, though. You have
the A shares are. You can buy the B shares.
Okay. Do you have any ideas, any areas maybe that start to look interesting for an investor with not that big of a portfolio?
Yeah, I'm generally not a thematic investor. Sometimes I find a sector that I like. I made some good money on the airline stocks in the United States. I made coming out of the financial crisis. Some good money in financials as well. AIG, Citigroup, Goldman Sachs. I don't currently own any of them. I do think a President Trump may be good for the financial sector in that I think it will be bad for the country, but good for the financial sector in that he is likely to weaken, if not try and eliminate Dodd-Frank, for example, in the new Republican Congress. And I think the banks in the short term might benefit from being able to lever up and take on a bunch more risk and all. I think that would be disastrous from a public policy standpoint. We've already seen the results of what happens when you let the banks run amok. But in the short term, it might be good for their stock prices.
Can you guide us through an investment you did? Why did the stock get cheap?
Like just sort of in general?
Or specific?
Well, I'll give two examples, and you can pick and choose. I'll try and keep them brief, but over the period of time, I have owned Berkshire Hathaway over 20 years. I've gotten to know the business extremely well, and I've been able to identify probably 6 or 7 times over 20 years when the stock has gotten really cheap and when I've really made it a large percentage of my portfolio. 10, 20, even 30% of my portfolio has been in Berkshire Hathaway at certain times. Today it's about 5%. I don't think the stock is screaming cheap today. But I don't know any screaming cheap stocks today. So this is one I continue to hold. Why did Berkshire Hathaway? Why has Berkshire Hathaway on occasion gotten cheap? Is certainly everything got cheap in the great financial crisis, but people were particularly worried about Berkshire Hathaway's derivatives exposure, etc. I'm trying to think other times during the tech bubble in 1999-2000, Berkshire Hathaway, because it didn't own any tech, was just sort of out of favor. Buffett was perceived as an out-of-touch guy who didn't understand the new internet economy, etc. So that would be one example where my suggestion to any investor would be get to know certain companies really, really well, and read books about them, go to their annual meetings, read their annual reports, and get some sense of how to value them, and then just be patient. And sometimes it can take years, but when a stock, invariably, any stock is going to get whacked at some point or another and get cheap, and then you're ready to take advantage. So I'll give you an example. McDonald's, I've owned a couple times over almost 20 years. Made a lot of money on it, and I know that business super well. I don't own it today. I don't think it's particularly cheap today, but there have been some great opportunities to own it over time. So those would be some examples I'd give.
So when you find a new stock to invest in, you look at the numbers and you look at the management, and how important is that for you?
Yeah. Well, basically, for me, it's a four-step process. The first question I ask, and I look at multiple new ideas every day, just reading the newspaper, looking at the 52-week low list, trading ideas with friends. So I have to do a quick screen to filter down to the ideas I really want to spend time on. So the first screen is what I call my circle of competence. Is this a company or business, an industry that I know something about, or if I do some research that I think I can really learn a lot about it? So that excludes biotech, emerging technologies. It excludes, I've seen pitches for the largest cement producer in Zimbabwe. Well, that stock might be cheap, but I just don't know anything about that. I'm never going to invest in it at any price, right? But I've been doing this now for almost 20 years. So that would be step one. Step two is I evaluate the business, the company, the industry, and basically I'm asking very basic questions about the balance sheet, how much cash flow does it produce, etc., and trying to figure out, is this a mediocre business, a good business, or a great business? Because that will depend on the price I'm willing to pay. I'll pay a higher price, a higher multiple for a better business, of course. The third question is I evaluate management, asking three questions. Do they operate the business well? Do they allocate capital well? And are they honest and shareholder friendly? So those three questions: do I understand the business? Do I like the company and industry? And do I like management? I could right now name hundreds of companies that meet all of those criteria for me. So the last question, though, is the hardest one and the most important one. Is the stock really, really cheap? Not 5% cheap or 10% undervalued. I'm looking for things that are 20, 30, 40, 50% undervalued. So that's the hard part, because particularly in an environment like this, there are lots of good companies out there. There are not a lot of good stocks out there because the valuation of the stock already builds in all the good news and all the virtues of the company and the management team.
You ever buy a company or a stock that you expect to be acquired?
Generally not, but often I find that the same characteristics I'm looking for are characteristics that acquirers would look for. But I'll give you an example. Netflix was one of my most successful investments ever, and this was after the stock had crashed. When they introduced a new product called Quickster, and when the stock was severely out of favor. The market capitalization of the company had shrunk to about $3 billion, and I figured one of two things would happen. Either the management would fix the company and the stock would go up, and if they didn't, somebody would pay easily would pay $100 per subscriber because they had about 30 million subscribers and a $3 billion market cap. So that's $100 per subscriber. And one way to think about valuation of subscription-based businesses, cable companies, cell phones, satellite television companies is you value them on a per subscriber basis, and then you look at the economics of an individual subscriber. So in Netflix's case, Netflix was being valued by the marketplace at $100 a sub in a world in which a cell phone subscriber was being valued in the stock market at maybe $1,500 a sub. And Netflix was being valued at $100 a sub. Now keep in mind the average person of Netflix pays about $8 a month. That's about $100 a year. So you could buy Netflix in the stock market valued at 1 year's worth of subscriber revenue. So I figured that seemed cheap to me, but even if it didn't seem cheap to me, I thought there were numerous acquirers that would love to own 30 million paying subscribers. And today, Netflix has almost a $50 billion market cap. The stock has gone up more than tenfold since then.
Wow. And how much do you focus on politics?
Well, as a citizen, I consider myself a pretty politically active citizen. I support political candidates ranging from the president all the way down to local school board races. So as a citizen, I'm very politically active. I generally try and keep my investing world and my political world separate. My political involvement I view as part of my philanthropic activities, the work I do with KIPP charter schools. My parents and my sister live in Africa. They live in Kenya, and so I do work for charities in Africa. That's part of who I am, but generally speaking, I don't make investment decisions based on my partisan political views. I would say it is extremely rare. It's almost unprecedented, I think, where right now my grave concerns over President Trump and what actions he might take have led me to be more cautious and conservative in my investment portfolio. I did not support President Bush, but that didn't affect my investing at all back then. I feel differently, and I am more concerned about President Trump than any president in memory.
Another thing that will affect the stock market is what the Fed is doing. What do you think they will do in December? The dollar is getting stronger and stronger here.
Yeah. That's not an area where I have particularly strong opinions. I've generally felt like the global, worldwide, ultra-low, even negative interest rates is not sustainable. And at some point, we're going to return to more normal interest rates. So as gravely concerned as I am about stocks in general, I would 1,000 times rather own a European stock index or the S&P 500 here in the United States than I would a European government bond index or treasury bonds here. My general view is that bonds offer return-free risk. You are getting paid virtually nothing to own them, and when interest rates rise, you're going to get hammered on the principal as well. So there is, to the extent that I am concerned about the stock market and have sold down some of my stock positions, I'm simply sitting on cash. The last place on earth I would put that cash is investing just in yielding almost nothing government bonds.
And one last question. As an investor, you've been in the business for many years. Do you have any lesson you've learned that you can share with us?
Well, generally speaking, I think Warren Buffett said it right when he said, as a general rule in investing, try to be greedy when others are fearful and fearful when others are greedy. So when, today, I see a very complacent market, stock valuation, stocks at or near all-time highs, and so I see investors being greedy, and that tells me to be fearful. And then when I see the election of an unprecedented candidate whose future actions are not knowable even to him, certainly not knowable to anybody else, but he doesn't even know what he's going to do every day. This is someone I've studied. Other than Warren Buffett and Charlie Munger, I've never studied any human being as closely as I've studied Donald Trump. And that's why I'm so concerned, there's no... It would be one thing if Mike Pence had been elected president, and I don't agree with his politics, right? But at least I understand where he's coming from. I think he gets up on Monday and he has the roughly same worldview that he had the previous day. And tomorrow he'll have roughly the same worldview and policies that he has today. That is not true of Donald Trump. It's whatever mood he's in that day, that's who he decides to attack, to sue, and now he's president of the United States. He can go to war with. He can start a trade war with. I don't want to be too melodramatic, but I'm going to use the word terrifying. It is terrifying. Just as an American, as a citizen of this country and of the world, but certainly as an investor. I hope that I am wrong and that my concerns prove to be unfounded and that this is a strong enough nation that it can weather 4 years of a Trump presidency. But I don't have, I hope that's the case, but I do not have a high degree of confidence that that will be the case. So my general advice to investors is I think for the next 4 years is just be cautious. Don't go to a cave and sell every stock and sit on gold. But whatever level of risk you were willing to tolerate a week ago, you should be willing to tolerate less risk today because it has become a much more risky and uncertain world.
It's definitely times to be aware.
Yes, yes.
Thank you very much.
My pleasure.